$45 billion for spices and mayo. I am telling you, this Unilever McCormick merger is real.
Oh, please. You're falling for a massive trial balloon. Show me the actual synergies between Hellmann's and garlic powder.
The grocery shelf monopoly alone is worth the premium. Condiments are practically a religion.
I'll believe it when the filings drop. But while we wait on your condiment cartel, Brookfield actually closed a real deal today. $3.2 billion for Just Group. The rundown.
I still can't wrap my head around $44.8 billion for spices.
It's Unilever and McCormick, Nate. You control the spice, you control the universe.
Okay, calm down, Paul Atreides. But speaking of food, Danone is buying Huel for exactly $1 billion.
I saw that. The tech bros are going to be devastated that their optimized protein sludge is now corporate dairy.
Hey, I drank Huel during my analyst years. It literally kept me alive during a live deal.
That explains so much. But look, Danone needs growth. Fluid milk is dead. Tech bro meal replacements are high margin.
Fair. Moving from liquid food to liquid cooling, Ecolab is paying $4.75 billion for CoolIT Systems.
Now this I love. Everyone is buying chips, but data centers run hot. Legrand also just bought 2 data center infrastructure companies, KeyDAC and TES. The pick and shovel play right now is literally just preventing server farms from melting.
$4.75 billion, though. For cooling. Ecolab makes soap and water treatment chemicals. They're paying a massive premium just to staple the words data center to their earnings call.
Oh, come on. You know better than that. It's enterprise-grade thermal management. The margins on AI infrastructure are wild right now. They had to pay up. The big one.
It's honestly starting to look like Brookfield is just playing Monopoly while the rest of the market is stuck playing checkers. They just don't stop buying.
Well, they officially passed go and collected Just Group. The deal closed on April 1st, £2.4 billion, or right around $3.2 billion. And I have to say, looking at the filings, I'm struggling to see the genius here.
You're kidding, right? This is a textbook roll-up strategy. Brookfield Wealth Solutions is basically printing their own gravitational pull at this point. They want to be the undisputed king of the life and pension sector.
Sure, if your definition of king is paying a massive premium for a UK retirement specialist in a macroeconomic environment that's, frankly, completely unpredictable. I read the release, Nate. They're banking on these magical cross-selling synergies that almost never materialize in wealth management. You're just buying the banker narrative.
Hey, I resemble that remark. But you have to look at the broader market context. Chesnara literally just put out a note saying their M&A pipeline in European life and pensions is highly positive. The smart money knows that sector consolidation is the only way to scale right now. Brookfield is simply writing the biggest checks.
A highly positive pipeline just means every boutique wealth firm in Europe is begging to be bought out before the music stops. Look at what's happening globally. Market analysts are pointing to a severe deal drought in South Korea for Q1. Buyout values plummeted by more than half. Europe isn't exactly immune to those same geopolitical headwinds.
South Korea is a totally different market with totally different structural issues. Wealth management in the UK is sticky. It's the ultimate recurring revenue model. You buy Just Group, you lock in all those annuities, you get instant scale. It's like buying a toll bridge. People still have to cross it, even if the broader economy slows down.
A toll bridge that requires constant regulatory upkeep and massive capital requirements. I found this one little footnote in the closing docs where they try to explain away the integration costs. They're amortizing them over a completely ridiculous timeline just to make the near-term financials look prettier. It's pure financial engineering.
Okay, I'll grant you the accounting gymnastics. They definitely dressed up the pig a little bit for the Q2 kickoff. But you have to admit, actually closing a $3.2 billion transaction right now is a massive flex. It sets a huge tone for Q2 deal making.
It's a flex. I'll give them that. I just want to see if the core math actually works a year from now, or if they just bought themselves a very expensive headache.
Fair enough. We'll check back on them next April. But if you think a $3 billion wealth grab is a big flex, wait until you hear what's cooking in the food aisle.
Please tell me you have an update on the Spice Rack drama.
Oh, I do. And the numbers being tossed around make Brookfield look like a literal rounding error. Unilever and McCormick might be about to drop voices. You read the analyst notes on South Korea this morning? Severe deal drought. Buyout values are down more than 50% for Q1. Everyone is blaming macro headwinds and geopolitics.
I saw that. But then you look at Europe and Chesnara is out here calling their life and pensions pipeline highly positive. Which is it? Are we in a drought or are we drinking from the fire hose?
It is absolutely a drought, Maya. You cannot look at one niche European pension firm and say the broader market is fine. The big money is terrified of the geopolitical risk right now.
Oh, come on. The big money is just looking for an excuse because debt got expensive. Chesnara is doing deals. Brookfield just closed $3.2 billion for Just Group. The money is absolutely there if the math works.
The math is getting weird, though. Look at the gossip mill today. Unilever and McCormick are supposedly in deep talks for a $44.8 billion merger of their food divisions.
Wait, really? Mayonnaise and garlic powder? Almost $45 billion.
Exactly. That is a massive number for grocery aisle consolidation. I am telling you, the big bankers are just getting bored. If they cannot buy tech or healthcare because of antitrust regulators, they are going to merge our condiments.
I completely reject that thesis. They are not bored. They are looking for pricing power. If you control the spices and the sauces, you control the margins. That is actually smart.
Spoken like a true spreadsheet junkie. I still think nearly $50 billion for flavor dust is wild. Speaking of wild premiums, Paramount is supposedly sweetening their bid for Warner Brothers Discovery.
Which is just a desperate race to the bottom of the streaming wars. Let us dissect that disaster tomorrow. I want to keep an eye on biopharma instead. Novartis is supposed to finalize that $2 billion Synovation deal.
Now that oncology pipeline is where the real premium is hiding. Spill the tea. I am telling you, $44.8 billion for a spice rack and some mayonnaise makes perfect sense.
You are out of your mind. Unilever and McCormick merging their food divisions is the definition of a Frankenstein deal. Have you looked at the supply chain overlap? It is basically zero.
But think about the shelf space, Maya. You walk into a grocery store and they own the entire aisle. Hellman's next to the Old Bay seasoning. The pricing power is absolutely massive.
Sure, if the FTC just goes to sleep for a year. Lena Khan is not letting them monopolize the condiment aisle. Plus, the rumor mill is spinning way too fast on this one. I need to see a real term sheet before I believe they are actually close. Right now, it just sounds like bankers floating trial balloons to see if the market revolts.
Spoken like a true skeptic, but the advisory teams are definitely buzzing. Speaking of buzzing, or maybe just desperate flailing, Paramount is reportedly sweetening its bid for Warner Brothers Discovery.
Oh, come on. Again? Are we just going to keep mashing distressed media assets together until they form one giant, unprofitable streaming service?
Hey, two rocks tied together sink faster, but they make a much bigger splash.
That is a terrible analogy, and you know it. They are just trying to buy scale because they missed the boat 5 years ago. I ran the numbers on their combined debt load yesterday, and I actually got a migraine.
You just hate media deals because the pitch decks are 90% pictures of celebrities instead of EBITDA projections?
I hate them because the math never works. Give me a boring, highly profitable financial services, play over Hollywood drama any day of the week.
Well, you are in luck. Because speaking of boring and highly profitable, we need to talk about what Brookfield just pulled off in the wealth sector. Tomorrow's radar. I'm keeping my eyes glued to Novartis tomorrow. They're supposed to finalize that $2 billion Synovation deal.
Just adding to the $46.8 billion biopharma wave from Q1.
Exactly. The momentum is spilling right into Q2. We're going to see a flood of mid-market pharma deals by Friday.
I don't buy that. One breast cancer drug acquisition doesn't mean the floodgates are open. Buyout values in South Korea just plummeted by more than half. The deal drought is real.
Sure, but ignore the macro doom for a second. Have you heard the Unilever and McCormick whispers?
The $44.8 billion rumor. Yes.
Merging their food divisions. Imagine the banker pitch deck for that.
It probably smells like garlic powder and desperation.
Sort of like Danone buying Huel for $1 billion. $1 billion for tech bro gruel.
The margins on powdered meals are actually fantastic. Read the footnotes, Nate.
I'd rather drink the gruel. We'll see if Unilever actually brings the spice tomorrow, or if it's just another half-baked rumor.